The markets are sending shockwaves across the globe. Yesterday, all three major U.S. indexes hit record highs. Gold shattered records too, blasting through $3,673 per ounce and climbing nearly 40% this year. And then, just when it seemed like nothing else could surprise us, news broke of a $53 billion mega merger in the mining sector that could reshape the future of copper and energy. This isn't just another day in finance, it's a turning point. Wall Street euphoria collides with fears about central banks. Gold, the world's oldest safe haven, becomes the hottest modern asset. And global corporations are placing once-in-a-generation bets on resources that will power electric vehicles and artificial intelligence. Today, we'll dive deep into this financial trifecta: the market's record highs, gold's record-breaking rally, and the mining merger that could define the next decade. Wall Street at record highs. The U.S. stock market has a history of resilience. But yesterday's rally wasn't just resilience, it was euphoric. The Dow Jones, S&P 500, and Nasdaq all closed at record highs. Investors cheered weak job numbers because it meant one thing: the Federal Reserve is likely to cut rates soon. This is the paradox of Wall Street. Bad news for workers often means good news for investors. A weak jobs report signals a cooling labor market, which gives the Fed cover to loosen monetary policy. And when money gets cheaper, stocks usually soar. But history warns us, rallies built on speculation can be fragile. In 1999, markets hit record highs on dot-com optimism, only to crash spectacularly. In 2007, Wall Street set new records, months before the financial crisis erupted. So is today's rally the beginning of a new bull market or the calm before the storm? We'll unpack. Which sectors are leading the rally? Tech, energy, financials. Why investors may be ignoring risks like inflation and debt. And how history suggests that euphoric peaks often come before painful corrections. The Fed's shadow over the rally. Behind every record high is the shadow of the Federal Reserve. Investors aren't just buying stocks, they're buying the Fed's future decisions. August jobs growth came in at just 22,000, far below expectations. Unemployment is ticking upward. Wage growth is slowing. All of this increases pressure on Powell and the Fed to cut rates at the September 16-17 meeting. Futures markets are even betting on a 50 basis point cut. But here's the catch. If the Fed cuts too aggressively, it risks stoking another wave of inflation. If it doesn't cut enough, recession fears could intensify. This section unpacks the Fed's no-win situation. History reminds us, Volcker in the 1980s chose pain to kill inflation. Bernanke in 2008 chose stimulus, saving markets but fueling future bubbles. Powell in 2020 slashed rates to zero, stabilizing COVID markets but planting today's inflationary seeds. The Fed's next move will decide if this rally has legs or if it becomes another bubble waiting to pop. Gold's explosive rally. While stocks cheer, gold is sending a very different message. Gold surged to $3,673 per ounce, up nearly 40% year-to-date. For an asset often considered boring, that's seismic. Why? Because gold thrives when trust falters. Investors buy it when they doubt central banks, fear inflation, worry about political instability. Right now, all three are in play. Fed uncertainty is shaking faith in the U.S. dollar. Geopolitical risks from Europe to Asia push investors towards safe havens. Central banks themselves are buying record amounts of gold, diversifying away from U.S. debt. This isn't just a short-term rally, it's the beginning of a new era. Analysts whisper of gold hitting $5,000 within the decade. Silver, too, is along for the ride. Its dual role, precious metal and industrial commodity, makes it a hedge against uncertainty and a bet on growth. We'll compare today's rally to past surges. 1980, gold spiked on inflation fears. 2011, debt crises in Europe and the U.S. sent gold soaring. 2020, pandemic panic reignited the safe haven rush. The difference now? The rally is broader, stronger, and more global. The $53 billion copper mega merger. While markets and metals dance, the corporate world made a move that could shape the next decade. Anglo American and Teck Resources announced a $53 billion merger, creating Anglo Teck, one of the largest copper producers in the world. Why copper? Because copper is the metal of the future. Electric vehicles need it. Solar and wind infrastructure consume it. Artificial intelligence and data centers demand it. Copper is the silent backbone of the green and digital revolutions. This merger is more than just consolidation, it's a bet on the future. And it comes at a time when copper demand is set to surge while supply struggles to keep up. We'll explore why resource mergers often signal big macro shifts, how Anglo Teck could dominate global mining, and what this means for countries that depend on copper exports from Chile to Peru to Zambia. This isn't just a deal, it's a statement. Corporations are preparing for a copper-driven world. Media power and succession. Amid all this, another drama played out quietly. Rupert Murdoch finally formalized the handover of his media empire to his son Lachlan. Billions flowed in payouts to other heirs. This may seem like gossip, but media power shapes financial narratives. Who controls the headlines often controls the sentiment that drives markets. We'll unpack how shifts in media empires echo through finance, politics, and public trust. Global cross-currents. These stories don't exist in isolation. Together, they create a web of tension and opportunity. Wall Street highs mask fragility. Gold's surge reveals hidden fear. Mining mergers show long-term corporate bets. Media power shifts influence public perception. Meanwhile, Europe wobbles under political instability. Asia navigates leadership transitions. Emerging markets brace for capital outflows. We're not just watching markets, we're watching a global system being rewritten in real time. A financial showdown. So what does it all mean? The final showdown of September 2025 is between optimism and fear. Optimism, record highs, mega mergers, corporate confidence. Fear, Fed uncertainty, political instability, and gold screaming warnings. History tells us rallies, crashes, and resets often collide in moments like this. What happens next could define not just the year, but the decade. If this mega breakdown gave you clarity, smash that like button, hit subscribe for daily viral insights, and comment below. Will the Fed cut 50 basis points or surprise with restraint? Is gold on its way to $5,000? Does the Anglo Teck merger mark the start of a copper supercycle? Your voice matters, because tomorrow's headlines could make today's frenzy look tame. This is Felix. See you next time.